and new warning signs that a recession could be on the way. All three major stock indexes took a serious beating to start the week. And we've got our Vlad Dutey here following the story. Vlad, you used to work on Wall Street. You know this area. What are we looking at here?
We're looking at, Tony, a bear market, which generally means an index like the Dow has fallen 20% or more from its high. The S&P fell into bear territory yesterday, closing at more than 20% below its January high. The Dow is down more than 7% from just a week ago, dropping 876 points just yesterday. Now, all eyes are now on the Federal Reserve and its chairman, Jerome Powell, who's in a tough spot. Here's why. If the Fed raises interest rates later this week, experts say it could send the market into deeper bear territory. If the Fed does not raise rates, inflation could keep rising. And right now, gas is at more than $5 a gallon. Food prices are up 10% in the last year, and the cost of travel is up 38%. And all those things could go even higher.
Vlad, thank you so much. So with the cost of living going up and our net worth going down, let's bring in CBS News business analyst Jill Schlesinger with some perspective and hopefully some help for those watching. So how significant is a bear market and what does it mean for the everyday American?
Well, look, I mean, it's significant. They don't happen that often, but about a dozen times since World War II. It depends on how long bear markets last. And to really determine that, we got to wait for the future, and that's so hard to do. So if you look at our most recent bear market in 2020, it was really short. We had a 5-week period where the S&P 500 lost a third of its value. Then it came roaring back. Sometimes a bear market can be a self-fulfilling prophecy for a recession. It's not inevitable, but it can mean that there's a leading indicator. It means that corporations aren't making as much money, investors are kind of wigged out, and consumers are really freaked out also. We had a University of Michigan confidence index released Friday. It was at a 50-year low. So consumers feel less confident today than they did amid the worst part of COVID. I think this is significant.
Didn't Jamie Dimon just say the other day, get ready for an economic hurricane? Is this what he was talking about?
Yeah, I think that this is not exactly what he was talking about, because a lot of CEOs, whether it's Jamie Dimon or James Gorman or David Solomon, the three big investment banks, what they're talking about is the economy more than the stock market. The stock market can recover pretty quickly. The economy, we're not so sure about. Right now, we're at a crossroads. As Vlad said, we have a Federal Reserve meeting. It's starting today. And the Federal Reserve has to thread this needle. They want to slow down the pace of inflation. But by raising interest rates, what's happening is they could actually tip us into a recession if they go too far, too fast. And the real hurricane could be if we're in a recession, still having high prices. That's called a stagnating economy with high prices, stagflation.
If you're someone out there with a job offer on the table now, does that mean you should take it rather than wait out?
Well, listen, the one part of the economy that has been strong is consumers continue to spend. You know, if you look at the airport travel data, we are seeing people on airplanes despite those 38% increases in airfares. So people are spending. Jobs are actually plentiful right now. So, yes, I think it is a good time to take that job or solidify it. But be clear. When we have recessions, it is important to go back to your financial basics, that emergency reserve fund, paying down your debt. And if you are still working, don't stop putting money in the market. This is your time to force yourself to buy at lower levels.
Right. Be aggressive.
Good advice.
Thank you, Jill.
Thank you, Jill.